AMD just had their most important earnings call ever. Whether you're a longtime AMD shareholder or you're just wondering if AMD can catch Nvidia, you should know that this isn't just about revenues or profit margins. AMD's earnings call shows us their place in the entire AI revolution. So in this video, I'll break down their latest earnings, one key insight that changed the way I see the company, and what this all means for the future of AMD stock. Your time is valuable, so let's get right into it. First things first, I'm not here to hold you hostage. So here's everything I'll talk about up front. AMD's latest earnings, their data center Instinct GPUs, AMD's single biggest risk, which is competing with Nvidia, and of course whether or not I would buy AMD stock now that it's at its lowest price since 2023. But let me start by saying that I don't think AMD is a bad company or a bad investment. In fact, I've made video after video on how AMD is the only company on earth with a shot at competing with Nvidia. But the further we get into the AI era, the wider the gap between AMD and Nvidia seems to get, and I think I figured out why. Let's start with AMD's latest earnings call. AMD posted record revenues of $7.7 billion for the quarter, which is up 13% quarter over quarter and 24% year over year. That's solid overall growth, but things get really interesting when we break AMD's revenue down by business unit. AMD has four major business units: data centers, client PCs, gaming, and embedded chips. If you've been watching this channel for a while, you know that I focus on investing in technology platforms that other businesses pay to build on top of. So I'm going to focus mostly on AMD's data center chips, which is their biggest and fastest growing business unit anyway. AMD reported $3.9 billion in data center revenues, which is up a whopping 69% year over year. That sounds great until you compare it to Nvidia. Nvidia's data center revenues were $30.8 billion last quarter, which was up by an insane 112% year over year. Not just that, but data centers represent 88% of Nvidia's overall revenue. Remember that number. Nvidia's data center revenues are 7.9 times bigger than AMD's, and they're growing over 60% faster. Why is that? Well, Nvidia's GPUs are the industry standard for AI training and inference, at a time when tech giants like Meta, Amazon, Google, and Microsoft are investing a combined $300 billion into AI infrastructure this year alone. And that's after DeepSeek showed the world how powerful AI models can be trained on far fewer GPUs than anyone previously thought possible, which is huge for investors because it means even faster AI adoption across the board. Let me explain what I mean. Somebody already got DeepSeek working on a Raspberry Pi and a single desktop GPU. That means that large language models are no longer only for companies with tens of thousands of expensive AI chips. The barrier of entry to run large language models just went way down, which means more research labs, small businesses, and entirely new markets altogether will start to use AI. At the same time, tech giants are still spending tens of billions of dollars apiece to fill huge data centers with expensive chips, since every dollar they spend on high-end AI hardware now goes a lot further, letting data centers support the same workloads at much higher margins or keep their margins steady on bigger workloads requiring massive amounts of data. And speaking of data, you probably know that VPNs protect you and your data by encrypting it and changing your digital location. But did you know that VPNs can also save you some serious money? That's where Surfshark comes in, the sponsor of this video. Surfshark is a super fast and easy to use VPN that you can install on unlimited devices with just one account to protect yourself and your entire family. They also have add-ons like Surfshark Alert, which alerts you if your email, credit cards, or personal information get leaked in a data breach. Talk about a lifesaver. Also, many online stores raise their prices based on your location. But with Surfshark, you can always get the best price on expensive purchases, like plane tickets, hotel rooms, and rental cars. So if you care about your family's privacy and you like saving money, you can go to surfshark.com/ticker to get up to 4 extra months for free. And with Surfshark's 30-day money-back guarantee, there's no risk in trying it with my link in the description below today. Alright, so here's the big insight. Nvidia's data center business accounts for 88% of their total revenue, and that revenue is tied almost exclusively to AI chips and infrastructure. But AMD's data center revenues only account for about half their total, with client CPUs, gaming GPUs, and embedded processors making up the rest. Let me point out two things here. First, AMD's gaming revenues are down 59%, and their embedded revenues are down 13% year over year. These segments are about 20% of AMD's revenue combined. And second, AMD's data center revenues are actually split between their Instinct GPUs, which compete with Nvidia, and their EPYC line of data center CPUs, which compete with Intel. So if we assume that half of AMD's data center revenues actually come from CPUs, then Nvidia's AI accelerator revenues are actually around 16 times bigger than AMD's. And the reason that Nvidia is growing faster is 88% of their total revenues are directly tied to AI data centers, compared to around 25% for AMD, after accounting for that 50-50 split. Said another way, for every dollar I put into Nvidia stock, 88 cents are directly exposed to AI. But for every dollar I put into AMD stock, it's more like 25 or 35 cents, depending on how much AMD's EPYC CPUs actually benefit from this AI boom. That's a big difference in terms of exposing my portfolio to the AI market. And just to be clear, AI is one of the only markets that matters for AMD shareholders right now. PC shipments were expected to grow by 5% in 2024 and 8% in 2025, and that number includes laptops and notebooks that don't need as powerful chips. Around 35% of AMD's total revenues come from PC CPUs, GPUs, and gaming chips, and those revenues are still lower today than they were back in 2022. Compare that to the global artificial intelligence market, which is expected to more than 8x in size over the next 8 years. That's a 30% compound annual growth rate through 2033. And the market for data center accelerators is expected to more than 4x in size by 2032, which would be a compound annual growth rate of 24% for the next 7 years. That's another reason that I'm so focused on data centers and AI infrastructure. Last year, I said that AMD could become a serious competitor to Nvidia for 2 key reasons. First, Nvidia's data center chips had limited supplies and wait times reached almost a year, which gave AMD a huge window to take market share from Nvidia if they could release a compelling AI solution. And second, Nvidia's data center solutions ran on InfiniBand, limiting the investments that most Ethernet-based data centers could make in Nvidia's ecosystem. But Nvidia fixed both of those issues a while ago by ramping up the production of their Hopper and now Blackwell chips, as well as releasing their Spectrum-X Ethernet-based networking solutions. In fact, around $3 billion of Nvidia's data center revenues came from AI networking last quarter, which is almost as much as all of AMD's data center revenues today. Now that AMD doesn't have those 2 big opportunities, it just comes down to how their GPUs stack up against Nvidia's. So let's talk about that next. AMD's MI300X directly competes with Nvidia's H100s, which are the current industry standard. The MI300X is designed for memory-intensive AI workloads like running large language models with huge context windows or generating video clips. When AMD released this chip, they claimed it performed around 30% better than the H100s. The problem is that AMD released these chips more than a year after Nvidia released the H100, which means all the biggest data centers, cloud service providers, and supercomputers were already starting to reserve Nvidia's H200 GPUs. Then, if we fast forward to a few months ago, AMD CEO Lisa Su announced the MI350X. Here's a quick look.
The MI350 series introduces our new CDNA 4 architecture. It features up to 288 gigabytes of HBM3E memory and adds support for new FP4 and FP6 data types. And again, what we're thinking about is how can we get this technology to market the fastest? It actually also drops into the same infrastructure as MI300 and MI325 and brings the biggest generational leap in AI performance in our history when it launches in the second half of 2025. Looking at the performance, CDNA 4 delivers over 7 times more AI compute, and as we said, increases both memory capacity and memory bandwidth. And we've actually designed it for higher efficiency, reducing things like networking overhead so that we can increase overall system performance. In total, CDNA 4 will deliver a significant 35 times generational increase in AI performance.
So, based on the huge leap in inference performance and the support for new data types, it seems like AMD's MI350X competes with Nvidia's Blackwell GPUs. By the way, it is worth pointing out that AMD was making $0 on these AI data center GPUs a little over a year ago, so building a multi-billion-dollar business that competes directly with Nvidia in just 5 quarters is actually an incredible achievement. The problem is that AMD's MI350X ships in the second half of 2025, while Nvidia's Blackwell chips are already shipping and sold out through the rest of the year. In fact, analysts expect Nvidia to gain AI hardware market share in 2025. And remember, Blackwell isn't just a GPU, it's an accelerated computing platform, with chips based on the Blackwell architecture making their way into robots, self-driving cars, and even desktop PCs, not just data centers and supercomputers. And by the time AMD fully ramps up the MI350X, Nvidia could be taking orders for their next generation Rubin GPUs. We know from Nvidia's investor presentations that they moved to a one-year release cycle for chip architectures, meaning from Hopper to Blackwell, and then from Blackwell to the Rubin architecture that Jensen announced at Computex last year. So one of the biggest risks for AMD is that Nvidia releases new chips almost as fast as AMD can build a competitor for the last one. Another big risk for AMD is spreading themselves too thin. Even though this video focused on data centers, AMD makes CPUs and GPUs for gaming PCs, custom chips for video game consoles, and has a big embedded chip business thanks to their acquisition of Xilinx. Together, these business units account for half of AMD's revenues. Remember, for every dollar I put into Nvidia stock, 88 cents are exposed to AI data center infrastructure. But for every dollar I put into AMD stock, it's more like 25 to 35 cents. Depending on how much you believe, their EPYC line of CPUs for servers benefit from AI. And we haven't even talked about AMD's open source ROCm platform versus Nvidia's CUDA ecosystem, their long list of acceleration libraries, and all the software platforms and AI models that Nvidia has built on top of it, which I've covered in many of my other videos. Which leads me to another big risk for AMD, the innovator's dilemma. There's no doubt that AMD makes arguably the best x86 chips on Earth. And I'm not saying that x86 is going away anytime soon, but most major chip designers are leveraging the ARM architecture more and more. Nvidia's Grace CPU is ARM-based, Google's Tensor processing units are too, so are Microsoft's Cobalt chips, and Amazon's Graviton processors. So as a shareholder, I want to see AMD invest where the industry is heading and diversify their product lines to include ARM chips in the future. Alright, now that I've covered AMD's latest earnings, their data center GPUs, and all the risks that come with competing with Nvidia in data centers while also making products for 3 other low-growth markets, let's talk about what this all means for AMD stock. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out and it lets me know to make more content like this. Thanks, and with that out of the way, let's talk about why I took AMD off my list of stocks to get rich without getting lucky in 2025. Whenever I make a list of stocks, I always try to make them work together by owning big pieces of high growth markets. For example, I put AMD on my list back at the start of 2024 so that I would own the entire data center GPU market. But a few things became clear as the year went on. First, Nvidia was able to solve their biggest challenges faster than AMD could take advantage of them. And second, Nvidia holds around a 90% market share for data center GPUs according to various industry estimates. And if I can own 90% of a key AI market with just one stock, then there's no real reason to buy another. And based on everything that I've learned by going to Nvidia's headquarters, attending their GTC conferences, and interviewing their executives, I agree with the industry analysts saying that Nvidia could even gain market share in 2025. In fact, I think Nvidia's hold on the data center GPU market is more like Google's hold on the search market. Google will never get disrupted by another search engine. It's going to get disrupted by a generative AI-based answer engine or an AI agent that will save people from manually searching through tons of websites and ads, which is why Google is investing so heavily in things like Gemini and AI overviews. And by the same token, I don't think Nvidia will ever get disrupted by another GPU maker. They'll eventually get disrupted by a different kind of AI chip altogether. Maybe it's one of Broadcom's ASICs. Maybe it's a different kind of ARM chip like Google's TPUs. Or maybe it's a wafer scale chip like Cerebras. I have no idea, but I'm willing to bet that it won't be a standard GPU. On top of that, AMD is spread across many different low-growth markets like PCs, game consoles, and embedded chips. Only around a quarter of AMD's revenues come from AI accelerators today, and Nvidia's data center revenues are 8 times bigger and growing significantly faster. Once I realized that I get way more exposure to AI for every dollar I invest in Nvidia stock than I do with AMD, It really changed the way I value both of these companies, and that's why I took AMD off my list for 2025. That doesn't make AMD a bad company or a bad investment. It's just not a pure play on AI, and that's my main focus, at least for the next few years, because that's where I think we'll see the biggest returns, which is why it's so important to understand the science behind the stocks. And if you want to see what other stocks I'm buying to get rich without getting lucky, make sure to check out this video next. Either way, thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.